This just happened. Jack Mallers stood on the stage at Bitcoin Vegas conference and detonated the old HODL playbook. He called out the fiat trap, exposed why holding Bitcoin isn't enough anymore, and dropped a radical new strategy to unlock wealth without ever selling your stack. And I'm a follower of Jack because he's clearly a millennial and he appeases the youngsters that are actually going to be inheriting the entirety of the Gen X and particularly the baby boomers wealth, analog wealth. And I really follow him because I like the way he presents himself to the actual Gen Z person, to which he resonates, because he's clearly, I think he's only 31 years old and he appeases the youngsters, right? So I follow him with a great interest because, as I said, his body language, his persona, the way he actually engages with the youngsters out there is quite important. The way he approaches the topic of sound money, smart money, the notion of time and energy, and how it relates to the detriment of the fiat system that we're in, unfortunately, and how Bitcoin, as an example of sound money, is the solution. Now, I'm going to give my few takes, as I usually do with these sort of videos, because I do have quite a bit to say. So he's touched on various things. The first one is to do with the vicious fiat cycle. Now, he paints this kind of flywheel picture where fiat currency is losing value as we speak. Every second, every minute that we wake up from our beds each morning and we go to work and we earn our day's check is every second that is lost due to currency debasement, currency devaluation by the powers that be. And what I mean by the powers that be are the central planners, the central banks, the governments, the financial institutions, the people with the institutions, the collective that have the actual keys to start rolling the wheel of printing money and thereby stealing our wealth. And where he made the mention about, in particular, stealing our time and energy, because that's all we have as human beings that are brought into this world in order to contribute to society and the prosperity of the world at large, through the conservation of time and energy in the hardest asset, which is Bitcoin. Well, this is where he attempts to explain the detriment of the fiat run cycle that we're in. For every second and every minute that goes by is every second and minute that we lose in our fiat currency savings due to unchecked printing, as I said before, thereby forcing us into a never-ending spiral of debt. And he gave some trivial examples, right, which we can all resonate with, where we all have credit cards, right, because the wealth that we have in our cash deposit accounts perhaps are not enough to cover our day-to-day expenses. And I'm talking about a huge proportion of people out there who are in that category, who are finding it difficult to reach ends meet at the end of their month. So credit cards is perhaps the most sought after means to take out credit card debt in order to cover our day-to-day expenses. He actually cited, I think in the case of the US, is around almost $1 trillion worth of credit card household debt in the US. I hate to think how much is the credit card debt across the world. It's probably into the hundreds of trillions worth of credit card debt. And clearly, as a result, wages are failing to keep up with asset inflation, which is designed to lead us into poverty. So we're like the little hamsters running around the wheel in the cage, trying to do our best to run as fast as we can in order to earn day check that we can, in order to fight against inflation, which is our enemy. But no matter how much we run, no matter how much we expend our energy in order to get hold of the largest day check possible at the end of the day, it's kind of a lost endeavor. We'll never make it because of the rate of inflation, because the various factors out there that are just simply outside the reach, outside the clutches of our control, because of the central planners, the central banks, the governments that are into the habit of continuously printing money, thereby bringing down the cost of our savings, of our fiat held currency savings. We're just losing the value. And that is the problem. And this is what he meant by the vicious fiat cycle, that we're continuously going around and round in circles to no avail, right? So it's just a lost battle. So he explained next, well, what is the solution? If we look in history, yes, we all know about gold. So let's just treat gold and precious metals as always been that historic analog hard asset in which to hedge the inflation. But as we begin to see, even the likes of gold is being debased because people can produce more gold. Through technology, they can simply dig out from the earth new ounces of gold. And even though the rate of production of gold each year is hovering around 1% to 1.5%, so that is the stock to flow. So that is the ability within which you can dig and produce more gold from underneath the earth. Well, clearly, it's still not the best hard asset because stock to flow to infinity is really the only indicator for pure sound money. So the ability within which to not being able to mine a new product, a new scarce asset, whether it's gold or anything else, it has to be that stock to flow to infinity. So the inability to dig out scarce asset, there isn't such thing as gold that can achieve that because, as I said, they still have that 1 to 1.5%, if not a little bit higher than that, of annual production of gold. Like I said, there are many companies out there, gold miners, gold diggers, even mineral companies who specialize through their technology they've invested to continuously dig up the earth for new ounces of gold. And as a result, gold is not an ideal sound money. It used to be 5,000 years ago, ever since Bitcoin was born. We are seeing, in fact, since the last halving that took place in Bitcoin, which is April last year, I believe, well, ever since then, is actually achieved for the first time in that it reaches just under 1% of mining new Bitcoins, which is actually underneath the 1.5 to 2% of annual rate of production of gold. So that is a significant milestone because for the first time actually proven harder to produce and mine new Bitcoins if you compare with gold. So in that sense, that is a significant milestone within which Bitcoin has achieved over gold even, right? So that is the reason why Jack Mallers made a mention at the stage at Las Vegas the other week that Bitcoin is ultimately the hardest asset known to man, and as a result it's the only solution that could effectively hedge against inflation, that could effectively hedge the governments, the central planners to print money, thereby debasing the rest of our fiat savings. It's the only hedge against entropy, against wars, chaos, the shenanigans from policymakers, from large tech and all the rest of it. Because part of the many attributes that Bitcoin has, it's the only money where you can't print more Bitcoins, you can't inflate more Bitcoin into the supply, you can't confiscate Bitcoin. It's the ideal tool for true financial sovereignty. That's the bottom line that I think Jack was trying to get at. And if you compare it, as I said before, with gold and fiat, well, Bitcoin clearly gets straight A's, as he mentioned. There's a huge list of all the various attributes within which Bitcoin competes with other supposedly hard asset materials, whether it's gold, precious metals, or even the S&P, because it achieves straight A's in portability, divisibility, and programmability. And also you can transport it, you can send it from wallet to wallet over the blockchain, the Bitcoin blockchain network, which is something you can't do with gold, clearly, right? If you think about trying to take some gold coins or your jewelry or maybe bars of gold through the airport customs or airport security, of course, with all the controls and checks and balances are in place at the airport's facilities, clearly they're going to sound alarm bells, and then you're going to find yourself with policemen crying around you and taking you to the back room somewhere to investigate, and thereby confiscating your bars of gold that you're trying to cross over to the other side being to another country, right? So, and there's a lot of defects with gold. That was just one example. The ability to confiscate, and it's just difficult to take the bars of gold with you. It's difficult to divide, it's not divisible, it's not programmable. You can't authenticate the ownership of gold. You remember, you have to kind of melt the bars of gold and then recast it and use really highly specialized chemical or machinery or technology, to cast back into the bars of gold once you've done the authentication of the gold is gold and not, is not blended with other chemical substances. So there's a lot of issues with gold, and then you have to think about the insurance, right? In order to safeguard the value held within that bar of gold in case you lose it, and then you need to think about maybe getting some bodyguards. So there's an awful lot of headache that comes with holding gold, owning gold, supposedly owning gold, as I said, if you compare with Bitcoin, which is free from all of those problems. So that is the solution, and there's a lot of growing ranges of participants, investors, who are now starting to wake up to the fact that clearly Bitcoin is a superior hard asset even over gold, which is all the more reason why we are seeing different types of actors, different types of investors starting to part some of their fiat held wealth into the Bitcoin asset class, whether it's real estate properties or fiat currency or arts and collectibles, even gold, bonds, and so on, right? I mean, these assets, unlike assets, are being demonetized as we speak, and slowly but surely we're starting to see those being introduced and invested into the Bitcoin asset class. So clearly Bitcoin achieves straight A's in every single attribute of sound money if you compare with the likes of gold and other precious metals and what have you. Which leaves, incidentally, the next point, where Jack explained quite eloquently, is the dilemma of the hodlers. So the famous HODLers Dilemma. And what do we mean by HODL? It's the acronym HODL. It stands for holding on to your dear life. And the analogy there is if we're actually immersed in full outright war or entropy, what is the most precious thing that we have that we need to hold on to ourselves, right? So we don't lose it. Of course, it'll be your life, it's your family and next of kin. Obviously, that has to be the top priority. But in terms of possessions on this earth, in the advent of entropy, to protect and behold, what will be your hold on to your dear life? Well, clearly for me, in terms of possessions, that is, would be Bitcoin. So that is how the acronym HODL came to be, right? You need to hodl onto that next available precious or prized possession that we have, which is time and energy conserved into Bitcoin. So Bitcoin is the HODL. It's the ultimate meme, which is strong, but incomplete. Why are we saying it's incomplete? HODL, we all been hearing an awful lot about the notion of, we need to HODL to our Bitcoins in the long term. And if we have spare cash around, or unused assets, unused analog assets where they themselves are being debased, let's convert that into Bitcoin, that is still incomplete. And the notion of DCA, you might have heard DCA, dollar cost average, it could be even euro cost average, pound cost average, or yen cost average, depending where you are in the world. It's still incomplete strategy because, and it's true that we explain that why it is a HODL dilemma at the moment is because at some point you eventually would be needing a form of liquidity. So if you were in a position, which I think was Jack's position at the time, in my view, he has foolishly sold absolutely all of the cash, all of his wealth into Bitcoin. So he had 0% fiat, which clearly is no good because you need to have some form of fiat money to cover your expenses. I'm not trying to say to you that you ought to convert absolutely all of your wealth and fiat to Bitcoin. What I'm trying to say is you need to allocate and move away certainly off the 0% allocation to Bitcoin into a manageable percentage that you're comfortable with and hold it into the long term. I think Jack went into the other extreme where he did the opposite. He sold everything to Bitcoin. But regardless of that situation, the key point here is not enough just to hold on to your Bitcoin into the long term, i.e. to HODL or even to DCA. You need to eventually need some form of liquidity. And this is where he attempted to explain that is the predicament that every Bitcoiner that we are hitting ourselves against the wall, trying to ponder, do we sell or do we starve? And then he went on to say that history has shown that the wealthy don't sell their best assets, they actually borrow against them. So why should Bitcoiners be treated differently? So that is an important point, because the history that is shown in that clip, where the company, the British and the Dutch, they battled out and formed this company where they placed their hard assets as collateral in order to borrow against to get a loan, without the need to relinquish or sell off those hard assets. They used it as collateral in order to take out a loan. So that is an example of a best asset in order to achieve the loan itself. And that, by explaining that, has actually led him to the notion of, well, if we part some of our bitcoins as collateral, we can do that. We can use that collateral, that hard asset collateral, in order to take out a fiat loan. And by doing that, by borrowing against bitcoin, you're effectively tapping into wealth without actually selling or parting with your bitcoin holdings, thereby preserving long-term upside. And this is where he explained, Strike's new bitcoin collateral fiat loan product, which he went on to explain why there is no rehypothecation, which means that unlike the fractional reserve banking that we are used to, so when we go out and get a loan, or when institutions take out a loan with a bank, we are all competing with potentially the same finite set of collateral, because there is a multiple to one relationship in terms of collateral is held once in banks, but the banks have the propensity and the ability to have multiple loans on the same collateral asset to different type of lenders out there. And that's how they make the money, because every time they link a brand new loan request potentially to your own collateral savings that you hold in your bank account, well, usually there's a 1:20 loan ratio. So they loan 20 times for the same money they have in your bank account. That is rehypothecation. And what Jack is trying to explain as part of this Strike new Bitcoin collateral fiat loan product, well, there won't be any rehypothecation. It'll only be a one-to-one relationship. So the Bitcoin that you collateralize in the platform in order to issue out your fiat loan can only be done once. There's that one-to-one relationship, not in the fractional reserve banking where they have 1:20, 1:30 relationship. And then he goes on to explain some other attributes, which I'm not going to dwell on too much, but I just want to give you an idea as to what the Strike is doing as an example. Remember, there are different companies out there who are trying to tap into this market need at the moment. He goes on to explain that during the lifetime of the fiat loan, using your Bitcoin collateral, the collateral that you deposit in the platform will be held transparently, and only you can have access throughout the duration of that loan. And the interest rate that the Strike will actually charge you for that is in the single-digit interest rate. So this is just one example of collateralize your Bitcoin holdings in order to take out a fiat loan to cover the hip surgeries or day-to-day expenses that you may have, right, without actually having to part with your Bitcoin collateral. That is the example type of a Bitcoin collateralized loan, or Bitcoin backed loan, if you like. And why he actually left that towards the end, because it is true that the actual predicament still remains, right? Because the only way at the moment, if type of product hasn't existed, we'll be still faced with the predicament of having to sell our Bitcoin holdings in order to capitalize on the gains and enjoy the proceeds as a result. But of course, that is a taxable event, which is not the case through this Bitcoin-backed loan, which has been explained by Strike and Jack Mallers on stage, which is another benefit. So not only will you not part with your Bitcoins throughout the duration of your fiat loan, you won't be taxed on it because you're not selling your Bitcoins. You're just using that as collateral in order to take out a fiat loan. So that is an advantage. So in summary, this is, one of the interesting interventions from Jack. I liked the way he explained the history behind why the fiat run system, why we are running into this cycle, in a vicious cycle of a fiat world that we live in, where we are enslaved in our jobs, earning our day's check, and for every second that is gone by, we are losing that second of devaluation of our hard-earned day's check. And no matter how fast we run the wheel, no matter how fast or good we are doing in our job and earning our wages, we're never going to be able to beat the rate of inflation, because it's controlled by the elite, it's controlled by those central planners, the central bankers, the governments that own the money printing machine. And every time they do that, they effectively steal our time and energy conserved in fiat currencies. And that is the issue, and why Bitcoin is the only solution, the only hedge against that atrocity, and not the likes of gold. And this led to his final part of his speech about the emergence of this need in the marketplace for Bitcoin investors to actually use their Bitcoin collateral to take out fiat loans to cover their day-to-day expenses without the need to part any of their Bitcoin holdings as a result during the life of that loan. And also they won't be taxed because they're not effectively selling their Bitcoin holdings, they're just depositing their Bitcoin collateral in order to take out fiat loans. So that is a summary of today's episode, and I just really want to bring it to your attention. And the last point I want to talk about on this Bitcoin backed loans business, because these are the type of products we're going to be seeing an awful lot more of in the days, weeks and months to come. But I have to add a caveat and a warning that you should be mindful, and I have explained it in many of my videos in my channel, which is all the more reason why you ought to subscribe to learn a little bit more. You need to do your leg and research, because the strike company headed by Jack, even though he may have good intentions to solve the Bitcoin HODLers Dilemma, as I explained earlier on, they are still nonetheless a counterparty risk. They are still a counterparty because in effect you're going to be depositing your Bitcoin collateral, even though you're going to have access to it during the duration of the loan itself. There is still nonetheless that counterparty risk, which you need to be mindful about and take that into consideration if you ever decide to follow that route in order to take out a fiat loan once you deposit your Bitcoin collateral in these Bitcoin backed loan platform type products. I just want to give you that caveat that you need to do your research, and there are many ways to do that. The first obvious one is to ensure that these type of issuers or Bitcoin backed loans are a registered security by your local jurisdiction financial regulator. That is, for me, would be my top recommendation. Of course, you need to do your other due diligence. You actually need to read their manifesto of the product they are selling to you, familiarizing yourself with what that Bitcoin backed loan product is all about. What are the terms and conditions, right? What are the protocol arrangements to access your Bitcoins at any moment in time of their fiat loan, and if there's any penalties for any kind of preemptive withdrawal of your Bitcoin loan. So if you want to back out from the fiat loan, are there any penalties or fees that you need to be concerned about? So that is what I mean by performing your due diligence. And importantly, as I said earlier on, to please check that the Bitcoin backed loan company is a registered security in your jurisdiction by your financial regulator. So hopefully you found today's episode insightful. It gives you that idea that we're seeing clearly that the Bitcoin ecosystem is getting larger every time, and there are more actors involved. There are more Bitcoin treasury companies like the likes of Strategy invest into the Bitcoin asset class, and not just them, it's the Bitcoin development companies, for which I would tag or classify the Strike company headed by Jack that you saw is an example for me as a Bitcoin development company, because these are the companies that are going to be producing these financial products, these Bitcoin backed loan products into the marketplace. Besides being a Bitcoin treasury company themselves, where they issue their debt and then use the debt to buy Bitcoins and hold it in their corporate treasury stash. But in addition to that, what Strike is doing, interestingly enough, is to produce these financial Bitcoin backed loan products in order to solve the Bitcoin HODLers Dilemma, in order to earn yield without the need to actually sell and part any of their Bitcoin holdings, thereby avoiding any taxable event at the result. But like I said, the caveats still remain. There are still nonetheless a counterparty risk involved, because there are counterparties. They're going to be still custodying your Bitcoin deposit holdings or collateral in order to take out those fiat loans. So that is something you need to be mindful about, and importantly to do your own research. So that's all I have for you today. If you enjoyed today's episode, incidentally, please don't forget to hit the like button, to share the video to your friends and colleagues at work. And if you haven't done so already, please subscribe to my channel as I regularly publish some interesting videos such as these. Anything to do with Bitcoin, blockchain technology and the future of finance. So till next time.